Please remember, none of this is financial advice, and this channel is sponsored by the XX Network. The only function of economic forecasting is to make astrology look respectable.
Which do you think would get there fastest? Cross-border harmonization of those kind of standards, or perhaps a new currency of the sort that Facebook was proposing that would get rid of the FX problem? They're both difficult.
Yeah, that's not a silver bullet. I mean, there's been, SDR and things like, the sort of basket type currencies. It's not necessarily obvious that that's a silver bullet. There does have to be, I think there's going to be a need for, reference currencies and reserve currencies, and maybe more than one. But I think the liquidity in those environments is critical. But how do we actually incorporate those into these larger cross-border flows? Because I agree with Sipnendu, the low value stuff I think is somehow solvable, even with the infrastructure we have and with a few tweaks and a bit of creativity, we can get there. But I think it's that bigger, high value, and I know Swift is obviously working on this and thinking about how their services will evolve, and I think we're all on the same page.
Yeah.
Swift tested DLT technologies and it failed. Why? Because it didn't have an open public ledger or a crypto asset. Private permission systems of harmonized ledgers are incomplete systems. Bob Way has talked about presenting the idea of RippleNet to the CEO of Swift, and essentially RippleNet was stolen by Swift to create Swift GPI. Swift GPI was a reaction to Ripple. That tells you everything you need to know.
I love the story this year. The dollar was super strong. Like, was it? Really? Was it against what? Right? It was strong against the euro and strong against the yen up until recently. In fact, although the yen has strengthened against the dollar more in the last 8 weeks than any time in history, I think is the right stat. Maybe it's 12 weeks, but
yeah, something like that. Yeah.
It's a crazy phenomenon. And I look at the dollar versus the renminbi over the past couple of years, and it's actually down. No, the dollar's strong. Well, I will just argue the dollar is the least weak of the major currencies. It's still toilet paper, swirling down the toilet as they print way too many of these things.
It's no secret that the U.S. is in debt. We've been deficit spending for over 20 years, and it's starting to take its toll, with over $31 trillion borrowed. We borrow money to sustain our quality of life, but the debt is adding up. Central banks are fighting this by tightening monetary policy, but politicians are unwilling or unable to actually cut spending. For example, despite the Fed hiking rates, the U.S. government just passed a $1.2 trillion omnibus bill spending.
Senators necessary to break the rules. Why? Because they're bankrupting this country. Both sides of the aisle. There's an unholy alliance between both parties. One party wants more welfare, one wants more warfare. It's either the military-industrial complex or the welfare-industrial complex. But what happens inevitably every year is spending goes up. People come and the journalists question, what will happen? What will happen with Christmas here? The only thing that is known to happen is this body, both parties, will continue to add to the debt. And there is a day when you wake up and the dollar is worthless. Right now, the dollar is losing nearly 10% of its value on an annual basis, but there is a day when it's 10% a day or 10% an hour. Great countries have succumbed to the destruction of currency, and it happens through debt, through deficit financing, and it's coming to us. There is a day of reckoning. Unless we wake up and say enough's enough, we're going to do the prudent and rational thing. We're going to balance our budget.
Economics isn't an exact hard science. A lot of what we know is based on correlations. For example, the UK recently passed a large spending bill, and as a result, the gilt market fell sharply. Gilts are the UK's version of treasuries. They dumped over 40%. The USA is no different. We keep spending, and at one point, it becomes too much. But by that time, it's usually too late to do anything about it.
And so you look at it versus, well, what about gold? Well, gold has had this interesting dynamic where for years, it had been the perfect store of value. And you look at stocks priced in gold. They're dead flat since 1997. In dollars, they look like, well, up until this year, they look like they were at all-time highs.
Yeah.
But that's because we price in this depreciating asset. But gold's been flat all year. Yeah, because gold every year for the last few years has been spoofed. JP Morgan paid, this is crazy. They paid $1 billion fine last year for spoofing gold. And they're like, yeah, but we made 20 billion. So it's just the cost of doing business. My head wants to explode, right? When they admit to doing bad stuff and holding the price down. And yet that's okay because, I don't know why it's okay.
The precious metals market seem to be gaining strength. Central banks have been buying gold recently, and they're doing it for the same reason that we're buying precious metals. They're an insurance policy in case the worst happens. If currency collapses or inflation gets out of control, gold can be used to stabilize the situation. The accumulation of gold by central banks has led to technical breakouts in gold, silver, and platinum prices. Charts are just a visual representation of price action, but they can tell us a lot about who is in control of the markets and when trends might be changing. Since the inception of fiat currencies, we've been in a perpetual bull market. In the short term, precious metals might seem boring, but over the long term, they've been very consistent. We're now seeing prices move above key moving averages that signal trend reversals. This indicates that people are losing faith in paper money and are worried about the future. Precious metals markets are currently in a bullish state.
Is actually to replace cash. And he actually made a statement that they will maintain the anonymity of cash. Yes, that he said yesterday. And which means that the mental model for retail CBDs is a cash replacement. In a way, you are replacing payment system. Because once you make it tokenized, you don't need a complex payment network. And you can actually move mobile phone to device to device. You can move money offline at China did. And China did 10 transactions offline. So I think there is a certain innovation, technology innovation at a low end for certain far-flung cities and also where you have infrastructure challenge. I think both the central bank are thinking about creating a cash equivalent. I don't know China case. I think there's not official stated position, but in RBI governor yesterday said, yes, we will put a tokenized cash and also be anonymous, which means it is a...
So it won't disrupt the informal economy.
Yeah, it's a way...
He mentioned the informal economy, which means the gray market and the black market. If you disrupt these markets, it could take down the entire system. There is currently a war with regulators. Economists understand very well the importance of privacy, while national security concerns are forcing KYC and AML. If you had a surveillance state, it would destroy economic activity.
They are the secure printer of currencies for like dozens of countries around the world. They're the people who actually print the fiat cash. And I learned that there's something called the International Currency Association. And I learned that there's a lot of older men in pinstripe suits who believe in privacy. And the reason they believe in privacy is that real cash, first in fiat and now in digital cash, is critical to economic growth. And they believe that the societies and and this is the job of central banks and, the better part of government in healthy countries and even not in unhealthy countries is to grow the economy, to be economically successful.
The utility of privacy is extremely important. After the Korean War, South Korea 50x the size of their economy, while North Korea stayed stagnant.
And I think cross-border payments are, nobody talks enough about their importance in the global economy. Like 15 to 20% of e-commerce is already global. And that's one use case of just retail payments. Cross-border payments can be categorized in a wholesale, retail, and remittances. And remittances are often not included under retail. But even remittances alone are a $589 billion global market that has been dominated by mostly traditional financial services providers. And there has been a lot of innovation in the fintech industry as well. But stablecoins and blockchain in general have been able to improve the speed and costs of many of these transactions, with stablecoins offering the added benefit of stability of value when properly collateralized.
Cross-border payments are an important part of the global economy. When these payments are instant and cost-effective, we will see a boost in economic growth. The traditional banking system imposes fees and other barriers that slow down economic growth. By removing these obstacles, the economy will be able to thrive. Crypto assets have the potential to remove middlemen and create a more efficient system. When this happens, the world is better off.
The original Facebook idea, it quickly went out of fashion and was squashed quickly by regulators, but seems to me quite an interesting idea to create an SDR that would move in a very well-populated network and get around all of these problems using new technology. Is that still a defensible case, do you think? As I still hear stablecoin pioneers talking about it.
I think the main problem with that was it was not decentralized. There was one entity, to your point again, Subnandu, there was one entity that maintained too much control,
Right.
and that's the risk.
Yeah.
With different stablecoins that exist today, whether as MiCA, markets and crypto assets regulations in the EU recognizes them, e-money tokens or asset reserve tokens backed by a single fiat or a basket of assets that have very complex rules. There is a concept of free competition there. Everyone, any qualified issuer, as per regulations that have come out and will need to come out in different places of the world, can issue a stable coin as long as it meets the necessary issuance guidelines for EMTs or ARTs.
Yep.
And that was the problem with Facebook's version of it. It was there was too much control sitting with one entity.
Yeah, and the central banks do talk about preventing walled gardens and rent-seeking monopolies and so on. So that's what you're addressing.
The SDR SWIFT is designed to be a public neutral good. However, over time, the U.S. has corrupted these services. The XRP Ledger is a decentralized public good that is gaining popularity as an alternative. There is a real need for a global neutral bridge asset, but this has never been possible before because there was no decentralized platform. The XRP Ledger is decentralized and there is demand for this service. This is why I believe Ripple and the IMF has had close ties. The economists realize the utility of the XRP Ledger, and there is a plan to make this platform into a Bancor-like system.
You could build all sorts of interoperability between domestic payment infrastructure, but you need to move liquidity. Till the point of time you are able to move liquidity, especially in this world of QT and scarce liquidity, money is no longer free. That becomes a game changer. That is how you start reducing the costs. You start reducing the costs by taking out settlement risk, having FX PVP, payment versus payment, so that you're not exposed to settlement risk. You don't have to go to CLS, wait for T+1, T+2 to get delivery of currencies. That is what is going to take out costs. So we are actively working on that through Partier, which is an account-based solution. And to Swapnindu's point and Andrew's point, and to a certain extent what Rana said, for low value, we are looking at deposit tokens. Mm-hmm. Like when Swapnindu talks about, you need stable coins. My argument is, why can't that be commercial bank based, right? We will issue tokenized deposits or deposit tokens.
The JPM coin is a US dollar backed coin, so there's no need to convert it into other currencies. Its purpose is solely to be used within the JP Morgan network. As interest rates rise, the cost of correspondent banking also rises significantly, since banks have to borrow money when rates are high. With a settlement asset like XRP, there's no need for borrowing. The currency conversion is instantaneous.
Cross-border is where the challenges continue to lie. It relies on correspondent banking. Banks like us, are the ones who are running the rails, but there are obvious challenges in an account-based model. So we firmly believe that message-based infrastructure, which is what powers the card networks, SWIFT, will give way to token-based infrastructure going forward. And that is where DLT can play a very useful role in terms of these token-based pipes.
Naveen from JP Morgan believes that the future of payments lies in token-based infrastructure. He predicts that both SWIFT and card networks will eventually adopt DLT technologies.
By replacing trust with truth, we take $7 trillion. $7 trillion. That's a big number, right? $7 trillion of waste that goes into bank fees, overdraft fees, transfer fees, custodial fees, accounting fees, auditing fees. Think about this. If you and I were a bank and we made a loan, and then a hedge fund wanted to buy that loan from us, it would take them 30 days to settle that bank loan. because there are 7 different computer systems, one written in COBOL, one written in Fortran, one written in C++, and one in Java, that all have to talk to each other and reconcile. And you got to pay a bunch of fees to finally get the fact that, yep, Bank of Mark and Blake did this loan, and that, whatever hedge fund, Perry Partners, decided to buy it. So that's crazy. That should happen instantaneously. If I want to sell you a share of stock, well, one, I should actually own the stock. Like my stock right now, it's not mine. It's UBS's. It's in UBS's name. I have an IOU to UBS. And if I sell it to you at Merrill Lynch now owns it. UBS doesn't own it. It sits at DTCC in a file drawer. You have a claim from Merrill Lynch. It's just like your money in the bank. It's not your money. It's the bank's money. You have a claim, an IOU, that is good most of the time. But what happens if UBS goes out of business?
Banks may become obsolete in the future as crypto companies innovate and remove the need for middlemen. Banks will likely adopt similar technology to serve their clients better before they become obsolete. With a tokenized system, there's no longer a need for custodians to hold people's value for them.
These walled gardens or permission blockchain, are you sort of corrupting the whole essence of what DLT is meant to be? I don't necessarily think so. Like if you think about Ethereum, the move to proof of stake, I would argue is a move towards centralization. There are a select group of people who are, but I do agree with Swapnendu that,
But the reason they move because they want to make everybody happy.
well, so there is no other DLT at scale, right? Like I'm saying.
So that's why go back to drawing board and figure it out.
Well, so my point is that all of these permissioned blockchains, can be side chains, can be layer 2s onto public blockchains. And that is what creates the interoperability.
Walled gardens will adopt a line of code called a federator. They'll be able to send value from the walled garden to the public ledger where conversion to other assets takes place. The value can move from one silo to the open network back to another silo. This is the future JPM envisions. And it just so happens that's what's being updated on the XRP Ledger. The problem of the modern economy is not a failure of a knowledge of economics, it's a failure of a knowledge of history. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon.